Welcome to TradeSpoon. My name is Vlad Karpel. I'm CEO and founder of TradeSpoon. And today we're going to have a live trading room open, trade stock and options using TradeSpoon technology. Before we begin, let me know if you guys can hear me and see my screen. We will begin shortly after. Welcome on Discord. Bill from South Carolina, welcome. Gilad, Block Zero, welcome. Please post a question. Don't be shy on Discord. Good morning, Bill. If you have any questions, please use stream chat. You click on live stream to participate, and then you go to stream chat, ask a question. This is the purpose today, is to answer any questions you have. Terada, Michael, Ted, Desi. Patrick, chat. Phil, good morning. Faust, Desi. I am drinking coffee, yes. Gotta stay awake. Columbus, South Carolina. Hello, Bill. Bob, thank you. Lalit, good morning. All right, I think we are ready. Block Zero, are you ready? Discord guys, please join, ask questions. Market is volatile, it'll be a lot of fun, so let's start. Welcome to TradeSpoon and Yellow Tunnel. Today we're going to have a live trading room open to trade stock and options, and then answer any questions you might have about current market conditions. We are trading in a bear market, very fast-paced market. So today is to share ideas to support each other. This is a judgment-free zone. Please don't hesitate to ask questions. There's, every question is a good question, and we're here to share ideas and to support each other. That's the number one goal. And, share our opinions and experience. This is my bio. I've been trading for started when I was 22, I think. So probably 25 years. I'm 47. So I've been trading 25 years. I've been managing my own money. Started TradeSpoon in 2012, started Yellow Tunnel in 2018. My background is, I have a master's degree in computer science, and I've been building technology since I was 22 for financial companies, for trading companies. Love trading psychology, love teaching, and I've been managing my own money. So that's my background. I was involved in several startups here in Chicago. Disclosures are very important. If I am trading options and stocks, if you haven't read characteristics and risk of standardized options at optionsclearing.com, I encourage you to do that. I'm not a financial advisor. I'm here to share my experience, to share my opinion, to share my trades. I'm not a financial advisor. I don't give advices. I'm, not part of I'm not regulated by SEC. I'm not regulated by FINRA. So it should not be assumed that the future trades will be profitable or will equal past performance. This is for educational and informational purposes only. All right, now that disclosures are out of the way, they're important. All right, welcome FTLT. FTLT, can you see my screen and hear me? All right, FTLT is here. That's good. So a few rules. One is portfolio allocation. Right? It's important to have a pre-market routine, right? Dr. Menaker, we have a lot of content on Yellow Tunnel site from clinical psychologist, Dr. Menaker. He was my one-on-one coach. It's important to have pre-market routine where you go over both positive and negative scenarios, right? You prepare for different outcomes and you write them down, right? Right now, market is, the key support on S&P is 380, right? We talked about this support for many times. If market drops below 380, right, and I would not, we have ECB form, all the major, financial interest rate decision, gurus are, speaking, Jerome Powell, Lagarde. So a very important conference, could spark another set of volatility. So for that reason, I would wait till end of the day, right? Wait till end of the day. Market might drop below 380, but I would probably not close all my positions. I would wait, till end of the day or for a follow through tomorrow, because we do have a PCE data. So it's important to write down, to have that pre-market routine and write down what you will do. You might say, I'm going to wait till PCE data, and if the market is still below 380, I'm going to, reduce my long positions, right? And maybe add short position. And then you would say, if the market stays above 380, then I might add long positions, or, reduce some of my hedges. So having that routine and mentally prepare for different outcomes, I think is the most, at least I found extremely helpful for myself. I know a lot of people say I have mental stops. I have stops sitting somewhere in the universe. I don't think that doesn't at least work for me, right? My mental stop changes every 5 minutes, as I see market goes up and down. But if I write something down in a journal, right? If I type, not even typing, writing down like the old school. And the reason for that is because, again, when you type something mentally, it's not committed to your hard drive, right? Not as in terms of your neural network and neural plasticity of your brain, it doesn't make as much of an imprint, right? And a lot less neurons are firing when you write something versus when you type something, or versus when you do mental, So that's how I think. If I want something committed to my brain, for me, I'm a very visual person, so I have to see it, right? If I hear something, if I have some mental image, I don't, 5 minutes later, I don't remember. But if I see something, if I write something down, then it is committed to my memory. So you want to find something that's commits to your memory and kind of engraved in your memory, and a lot of neurons are firing when you decide on something. So I propose, for me, what works is obviously journal. I'm quoting my ex-boss. He said, write it down, put it in a FedEx envelope and ship it to somebody. If you want to make an impression on someone, if somebody owes you money, yeah, you can send them email, he'll ignore it. You can send them text message, he'll ignore it. You can send them, tell him verbally, he'll ignore it. But you put it in a FedEx envelope, you write a head letter from your attorney and you send it, well, then, that will make an impression, right? So some of these tricks are extremely important, especially in anywhere, in trading. So you have pre-market routine, you have a journal. First rule, I propose on average 30% of your portfolio in cash if the VIX is under 20. If the VIX is staying above 20 for the past 6 months, like we have now, 50% of your portfolio in cash. Second one is portfolio drawdown. Welcome, FTLT. Block 0. Let me know if you have any questions. All right. The second, so that's a very important, and that's a part of the pre-market routine, writing down 4 positions, right? I propose to have deciding what your maximum drawdown in your portfolio, right? Some people complain, I'm down, QQQ is down 35%, I'm down 50%, I'm down 70%. That should never happen, right? That should never happen if you follow certain rules and this is completely in your control. Right, you can have all your position in Bitcoin, but if you just follow the rule that you can only have 4 positions with maximum loss of 2.5% of account value, then you should not be down more than 10%, right? 4 positions times 2.5, technology is down 35%, you're only down 10% if you have that rule. If you don't have that rule, that's why some people are down, either 35% like technology or more. So that is a very important rule to decide what is your maximum drawdown. We're trading in a trader's market. I still don't think this is an investable market for longer term. A lot of people would argue with me, especially on TV. They would say, well, this is, you can't call the bottom. Market is down, QQQ 35, S&P 25. You can't call the bottom. This is the time to be nimble and start investing. For longer term, you'll be happy at 3 years. I think you can get a better deal in a few months. So, I don't think this is an investable market, but this is a trader's market, right? You can take advantage of implied volatility. You can take advantage of swings in the market, selling out of the money, put spread, call spreads, and take advantage of these sharp moves up and down. But no matter what your strategy is, if you follow this rule, 4 position and maximum loss of 2.5%, then your drawdown is 10%. I would write that down in your trading plan. I would put it in a FedEx envelope, and in the morning in your journal, I would write down, do I have, if you have 5 positions, even if the market sold off or rallied, you probably don't want to add the 5th position, right? You don't want to break your rules. Same thing if you bought FCX, and you're down more than 2.5%, it doesn't really matter that it's oversold or not oversold. You want to follow your rules and not break them. So how do you avoid breaking the rules? Well, position size, right? Position size. You can look at the stop loss, right? Right now, market is about to open. I was looking at the futures market. You have a very clearly defined target. We have a 52-week low, 363 in S&P futures. We have 394 reactionary high, and we retraced close to 50%, right? So 62%. So classical technical trading, not very complicated. Fibonacci retracements have been invented in 1600s. Not invented, but defined. It's a simple mathematical formula that everybody follows, right? So 50% retracement happened to be 380. It happens to be actually 62% retracement if you look at the weekly chart, right? So that this is kind of a self-fulfilled prophecy, right? Because everybody's looking. 377 happened to be 62% retracement for the, pandemic low to pandemic high. It also happened to be 62% retracement from recent high and recent lows. So 50% retracement is 379, right? And that's the kind of the magic line between bulls and bears, right? We're still, Lagarde is still speaking as I speak. So, if she says something that unexpected, right? The recession is getting worse than expected. We had negative GDP today, again, 2nd quarter in a row. Expected negative 1.5, actually a little bit worse. GDP is a little worse, but market seems to at least not react to that news, right? It's kind of neutral as expected. So now, Lagarde speaks and everybody's kind of monitoring the futures. So if we close below this 50% retracement, right, this is another support, June 15th high. This is the gap, the second gap. Then the bears are going to be in control, right? We do have PCE data. I think will be probably more important than GDP number or Lagarde speaking. But this week, going into the July 4th weekend, will probably define who's in control, right? Going back to this entrenchment war, right? Which side is winning? Is it the bulls or is it the bears? But everybody's entrenched right now. That's 380, and this is a pretty long position. A lot of bulls and bears spend a lot of time digging into these trenches, so it's going to take time to go one way or the other. Let me know if you guys have any questions so far. All right. Good morning, Fred. John, thank you. Thank you, John. GDP already has been released, 7:30 Central, 8:30 Eastern. So it's been an hour out. That, do I add for 380? You wanted to see that it holds, right? So I would not add, I would not subtract, I would wait, right? Right now, Powell's speak, market is going to be down, is going to be up. I would wait till end of day today. I would probably wait till tomorrow morning PC data, right? I think this is going to have a lot more effect, right? We thought GDP is going to spark volatility, it did not, even though it was worse than expected. Negative GDP 2 quarters in a row, by definition, we are in a recession. I guess not everybody's definition, because they're anticipating recession to be next year or late this year, but irrelevant. We are in the bear market. We are trading in the bear market, but inflation data I think is going to be more important. So tomorrow, if we don't have volatility today because Powell is speaking as I speak, right, then tomorrow. So today I won't, market can go up or down very quickly, right? Bill, I feel like I missed opportunities by waiting until the end of the day. I will try to get in, make a small gain, and get out. I mean, if you're a short-term aggressive trader, right? If you're a short-term aggressive day trader, right? We're talking about, depends on what kind of trader you are. If you're a long-term trader, you hold in for a few days, few weeks, I would wait till end of day. Obviously, if you're a short-term trader, well, you probably want to go short right now, not long, right? Because we are already below 380. We're kind of dipping below this level. So you can go short, try to look for, 0.5%, 1% gain. But if the market reverses back up above 381, then that's your stop level, right? Because these moves are going to be violent. But one of these reasons I'm proposing waiting till end of day is, again, because it's driven by the news, right? Literally, you have to listen to what Powell is going to say or Lagarde, and as they speak, market is going to move. So this is completely random. You can't really predict it. If you're a day trader, they might say, well, they just look at the price action. If it's below 380, they think it's going to continue going lower. Okay, then you go short. But again, it all will depend on what Powell will say, right? So for that reason, usually you don't want to trade around the news, right? Or while the news are happening, right? You kind of want to establish this position either before or after. Right? Same like when oil inventory numbers are about to be announced, you don't want to, be day trading oil, right? Usually day traders, they try to avoid the news because they just want to follow technical analysis. But right now, technical analysis is kind of a little bit useless because Powell speaks and his perception of inflation is going to create a lot of volatility in the market, right? That has been the trade, right? Everybody's trying to guess what Powell is going to do, or Lagarde, and it can be very difficult to trade around that. So Bill, hopefully that makes sense. Ted, thank you. Albert, good morning. Desi, you could be missing potential moves. So I assume you're not day trader, but again, it's not, Powell doesn't speak every day, right? So you could miss potential move, that's true, but then it becomes kind of a random event. If you're right now day trading while Powell speaks, I think it's element of luck. You can be on the right side of the trade or wrong side, but it's not a skill, it's luck, right? You're trying to predict what Powell is going to say. I mean, you can say that he's not going to say anything new and just go bullish. I guess, that could be a good approach. But for day trading, I understand. But even for day trading, I still would not trade around the time when Powell speaks. Powell doesn't speak every day. Seems like he speaks every week, but that's my opinion. All right, Desi. DESI. Sorry, I'm mispronouncing again. All right, so JP Morgan, DESI, very weak price pattern, unfortunately. So to answer your question, for now, it is above this trend line, but extremely weak rebound, right? You look at JP Morgan and you look at, let's say, Google, right? Google, much stronger rebound, a lot more constructive price pattern than JP Morgan. So JP Morgan, again, I would sell into the rallies. If Google, I think, can rally and maybe even get to 2,500, I think JP Morgan is going to continue to underperform. Very weak rebound so far. All right. Let's look at the yield. Everything is driven by yield, right? If Powell speaks and yield jumps to 350, 360, that means fear of inflation. So far, the line in the sand, the entrenchment is 3.2, right? That's the previous high, May 9th high. Now we're trading below that as Powell and Lagarde speaks. That's positive, right? Low interest rates should help technology, right? It should push technology higher. So that's positive. Dollar is continuing to go in higher. It is trading in the box, so that's positive for the market also. The fact that it's not jumping to 106, 107. So that's positive. High yield doesn't move. Corporate bonds are higher. TLT slightly higher. Let's see. QQQ is down 70 basis points. Again, sitting at the similar to spiders. It's sitting at this key support 280, which was the May 20 low. Right. Everybody's watching this level. 280. It happens to be 280 on QQQ, and spiders, 380. Which we are now below. Gold slightly higher. Energy, metals, miners slightly lower today. Crude oil. Let's see, probably. Crude oil has strong rebound from 100 to 110, right? This is September contract. So we traced 50% of the drop in oil. Let's look at what else. Let's look at the watch list. So materials pulling back today. Can you mention what technical signals that you look for when you enter or sell and position? So technical signals, I look for support and resistance levels right now, right? So you can look at the stock forecast toolbox. You can see support is at 374. Overhead resistance is 392. So the vector turned positive. So the model sees positive vector that bulls are still in control, positive trend. Today it shows negative, but for the next 10 days it shows positive trend. Support 374, overhead resistance 392. So ideally, if you're a short-term aggressive day trader, then you buy at 374 and you sell at 392. I know 380 has been extremely important support level, so that's kind of I'm waiting for. Right? You can say, well, we're at 379, so but again, unless you day trading, I would wait till PCE data tomorrow. Let's see. So home builders are down 1.5%. Metals and miners are down 1.5%. Let's see. Industrials are down 1%. So weekly, looks like retracing more than 50%. Continuation of trading lower. Let's see, utilities slightly higher, consumer staples slightly higher. So we have retail down 2%. So very weak retail, already retesting the lows. Semiconductors are weak, down 2%, already retesting the lows. Russell 2000, 50% retracement. So transportation is down 1.5%. Banks holding up better. So QQQ is at 281 and Spiders at 379. All right, let's review the position. Let's see if you have any questions. Raymond, I'm not linking the question was, why am I linking JPM to Google? I'm not linking, I'm comparing which sector is leading, which sector is lagging. So technology is leading and bank stocks are lagging. That's why I'm comparing them. JP Morgan. So in newsletter, we did say that financial stocks can rebound, right? So is technology. I'm still, I think it's too early to be overly bearish, but I still think there's more room to the upside for the market, along with technology and JP Morgan. Because market is extremely oversold, right? We've traded 5 days above the lows. So worst case scenario, we could still have this double bottom again, right? Or maybe marginal low, but I still think that all of the negative news are factored in. Market is extremely bearish, right? So kind of more of a contrarian trade. And we are due for a little longer rebound that we had in the past, 6 months, right? In the past 6 months, longest rebound was 3 weeks, right? That was back in March. We literally since March never had more than 1 week of downtrend. So I still think we can have 2 to 3 weeks of higher highs, higher lows. But the assumption is always the inflationary data, right? I'm gonna make an assumption that GDP as expected, right? That the current pullback is as a result of Powell and Lagarde again reiterating that they might push the economy into recession, right? Every time they say that, market pulls back, but this is not the first time they said that. So I assume this is going to be a non-event, and I'm assuming that tomorrow core PCE months over months, year over year will be in line, right? So my inflation, my assumption that all of the negative news already factored in, and this is just a repetition of the same news. And because market is oversold, we will rebound. A little bit longer rebound than we had, in June and in May, right? So similar rebound to March, 3 weeks. My long-term expectation that we will break through this level and we're heading lower, but short-term for the next couple of weeks, I think market can, continue going higher. And we just have to wait and see, right? Right now, the headline news from Powell is that we might over-tighten market conditions, and and the market is heading into recession. We might tilt the market into recession. That's the headline news, right? And Spider is down 30 basis points. When he said that, in April, or when he said that in May, market was down 4%. So it looks like market already digesting that recession news, and people just kind of listening to the next news, right? So we'll see if that setup will stay, right? But for now, I think it's just too early to tell. I think it's too early to tell. I still think this rebound has more room, but obviously we have to wait till tomorrow. Carol question: am I using 1 hour on stock forecast toolbox for day trading? I do, but only for day trading. I think the biggest indicator is 10-day in 6 months, because 10-day, I know what the support is and resistance, right? It's usually pretty accurate, and it gives me the trend. So I know bulls short-term in control, and I know it can potentially drop to 375 level, and overhead is 392. But it does show, model at least as of right now, shows that the path of least resistance is to continue going higher, right? So assuming that there's not going to be any worse news than expected, then that should be the setup. Any other questions on Discord? Go to webinar. All right, let's review some of the positions. Let's see if we want to make any adjustments. So FCX. Let's look at 1 hour chart of FCX. So it's off of its low. Main support is at 30, right? We briefly traded below 30. Now we're trading above 30. So we did have a strong rebound yesterday. Gave up probably half of these trades. And again, we just have to wait and see. So for now, I'm not sure. I'm long FCX. I have a call and a stock, and I've been trading around this position. So for now, I'm holding the FCX. IWM also. I have a call spread, so I still have a call 180, 190 call, but I also have a put spread. So it's important to be long and short the market at the same time, right? You can do it with a spread. In this instance, I have a bullish call spread and a bearish put spread. Again, IWM, no changes. It closed the gap, right? We have 3 gaps on the downside. We already closed gap 1. We closed gap 2, right? So pretty constructive pattern, strong rebound. It pulled back, closed this gap. We'll see where the market ends up. For now, I'm waiting. I did initiate a new position. So if you're not comfortable trading options, I have XOP energy calls or accidental petroleum stock. So if you are in Profit Accelerator, or if you're doing robo-investor, or if you're just not comfortable trading options, we had a strong pullback in energy, right? Strong pullback in energy, and accidental down 26%. Basically, by definition, kind of marks the end of the bull market in energy names. And we do have a strong rebound, close to 50% retracement in accidental petroleum. I doubt we're going to make new highs. I doubt we're going to get to the, even retest the highs, but 50-60% retracement, I think it's possible. So for now, I'm long accidental petroleum, and I'm also long XOP call spread, right? So in both cases, I'm long either the stock or the options. Keep in mind, if you trade in copper, if you trade in oil, if you trade in platinum, if you trade in any materials, they're highly correlated to each other. So it's very important to stay diversified, not have a concentration, right? One of the biggest mistakes in a bear market for me would be concentration, right? Out of these 4 positions, they're all 4 Bitcoins. They're just different types. And one is Dogecoin, and one is Ethereum and one is Bitcoin, and you can see when market sells off, they all sell off at the same rate, right? Maybe Ethereum down more than Bitcoin, or maybe Dogecoin is down more than Ethereum, fine, but high concentration. Commodities, no different, right? You might think that palladium will outperform platinum or will outperform oil, maybe for a short period of time, but divergence will exist, but not for a long time. So if you have XOP and you have Occidental and you have FCX, consider it as one position. I usually do more than one because we have some traders that are more comfortable trading stocks, some more comfortable trading options, but the rule applies that it's 4 positions, 2.5% maximum loss per position. So you have to be carefully select which, based on your background and based on what you're more comfortable trading, spreads, options, or a stock. But the rule stays 4 positions, 2.5, and out of those 4 positions, you don't want to have all 4, XOP, FCX, platinum, palladium, because that's just one position, and you just have too much concentration in one specific sector. QQQ, right? I'm still long QQQ. I have 280, 260 put spread. I'm waiting for the 280 put to lose probably half of its value. I'm talking about triggers to exit. Sold it for $12. If it gets to $6, I want to start. I think the 280 level will hold for now. And if you're not comfortable trading spreads, credit put spread, then you use QQQ. Notice I have different cost basis. 285, 300, 305. So I am dividing my trade into 3. Right? I'm not doubling down when the trade goes against me. I use dollar cost average. I look at my stop level, right? And let's say QQQ. What is my trigger, right? QQQ. My trigger is 268, right? So at this point, if you're thinking about entering QQQ position, 283, right? Let's say like Desi said, you think that market is gonna rally, right? Or we're gonna hold this line. Okay. So you buy at 283, you're clearly, that your stop level is 268. So let's say you buy at 283. Your stop level is 268. Market usually overshoots on the downside. I would say give yourself a little bit more room, maybe one additional 1%. So let's call it 263, right? Let's for a round number. So you have down 20 points. So you might say my risk is 20 points to the downside. If bulls if the rally stays longer than in March, or similar to March, couple of weeks, then potentially we can retest these highs, right? 283 to round number, let's see, 313. 313 plus 30 points, right? So you say 30 points to the upside, 20 points to the downside. How much can I risk? On the $10,000, 2.5% is $250. So if you have $10,000, it's $250. If you have $20,000, it's $500. If you have $5,000, it's $125. So average account is $10,000, $250, 20 points. You can buy 10 shares, right? Roughly 10 shares, a little bit more. So the right way to do it is to buy 5 shares now, right? If you think QQQ is turning positive and we might rally, despite negative GDP and negative comments from Powell, then you basically say, okay, I'm going to buy 5 shares now, right? All of a sudden, Powell says something different again. And instead of being up 20 basis points, let's say we're down, right? And we're down back and we're retesting to 68, let's say, Friday. So then you can say, well, maybe PCE data is better than expected. So you buy the second half of the shares, plus 5 shares. So that's dollar cost average. That's appropriate, right? So that's scenario number 1. The inappropriate scenario would be scenario number 2, where $250 is your risk. You buy 10 shares now, right? Market pulls back to 268, and you buy 10 more shares because you think it's going to hold, right? It didn't hold. Market breaks through this level. on above average volume, and all of a sudden you're down, instead of being down 2.5%, right? That's scenario number one. Scenario number two, you're down 5%. And that is the most common mistake, right? We all make this mistake, right? We get into a trade, it goes against us, and we are converting trade into investment, right? We self-serving biased, right? Trade, you turn into investment because it's down 2.5%. You tell it to yourself, well, you can't really time the market, you can't find the bottom. 268 sounds like a good entry point, so I'm just going to convert this into an investment. And you do it with one trade, you do it second trade, third trade, market continues to go lower, and all of a sudden you're down more than 10%. This is a scenario you're trying to avoid. The only way to avoid it is position size, right? Instead of buying 10 shares and you go through this negative scenario and a positive scenario, you split it into two, right? Into two trades. Because nobody knows exactly, right? I can totally see a scenario where we are retesting 268 on Friday. I can see a scenario where, retesting 312 on Friday, right? Both scenarios are possible. Any questions? Block Zero. All right. Thank you for your comments. Block Zero. I'm out of crypto, short SPX. 2 days trade on short side. Market too volatile for stops. Right. There's two types of traders, right? If you're a day trader, right, you're an aggressive short-term trader, you might be bullish, you might be bearish, right? You might say, I'm looking for plus 30 points, minus 20 points. That's fine. But you have to be very disciplined, right? I think, if you don't have stop losses, I would propose to, again, if you don't do stop losses because market is too volatile, then again, the only way you can protect yourself is position size. I still encourage you to go through this scenario, right? If you're short, you probably want to close your short position if market trades above 295.6. If you're a day trader, right? If you're holding 2 days, I would assume if you're short right now and the market and you see 1 hour candlestick, right? I would do 1 hour candlestick, 10% of SPX. Okay. But same rule applies. Same rule applies whether you do day trading, you don't want to be down more than 10%. So if you're looking for 10% price fluctuation as SPX, it will be the same scenario, right? If it goes up higher 1 day, higher 2 days, most likely you're going to reach 316 level. Again, you have to use dollar cost average because at 316, you do not want to be down more than 10% of your account value, right? If you're short-term bearish and long-term bearish, right, you want to add on to your short, right? So if let's say market breaks above 296, you either close your short position or you have to be prepared that at 316, 320, maybe you're down only 5% of your account value and you're adding to your short position, right? You're using dollar cost average. Because if you're down 10%, it could go up to 332, right? You don't really know. Tomorrow on PCE data, market can just rally very quickly. All right. Block Zero, thank you for the question. Appreciate this. Right, but so two types of trader. Long, right? You don't want to trade against the trend. The trend, if you look at the stock forecast toolbox and you do 10-day, it's bullish. But 6 months, it's a deep downtrend, right? It's down 5%. Spiders model already identified that the 380 level will not hold. Maybe August, maybe October, maybe November, we will get to 350, right? That's the next level. It predicted the low 387. We were at 368. So if I have to guess, we're going to get to 330 now. We're probably going to get to 330 between now and November, if I have to, based on the model and how quickly the negative trend is accelerating. So if you don't want to trade against the trend, then the most popular position is you just short the market on rallies, right? That you short it at 300. If it jumps to 313, you short it. If it jumps to 330, you short it again, right? Because those are your level of overhead resistance, but you still want to follow the rule of not being down 10%, whether you short the market or the long market. That doesn't change. Dollar cost averaging on the downside. Perfect. So that's the perfect strategy, right? You short the market, you use dollar cost average, but the most important is position size, right? If I have to pick one thing that I always do wrong, it's a position size, right? I'm usually very good in trend, finding the trend and, up down market. Usually it's very difficult to time the market. I think it's going to get to 310, by July 10th. It might get to 310, by, July 30th. Right, but so timing the market is very difficult, right? Finding direction or trend is very easy, right? You look at, you can look at the model. You just use naked eye, and you can see lower highs, lower lows. So it makes sense to continue shorting the market. You just have to be careful not to break that rule that 4 positions, 2.5% of account value. At any given point in the market, you don't want to be down 10%. And if you are, then you want to kind of close your position and just regroup and give yourself a little bit more time. All right, so we went through some of the positions. Let's see, technology, SH. So profit accelerator, robo-investor. If you're not comfortable trading options, again, one way to hedge is to add onto your SH position. So profit accelerator on yellow tunnel, robo-investor. Again, dollar cost average, right? Similar to approach from Black Zero, right? Black Zero said, so I'm shorting, right? I shorted at 1527. The market, this is inverse ETF, right? A lot of people cannot short the market, right? Mentally, especially if you're new to trading, you don't know what it means to short the market. I mean, you kind of understand intuitively, but it's just very difficult to do it. So if you cannot short the market, but you still want to be protected, you can buy SH. SH is just inverse of S&P 500. So if the market is down, SH will be up. So same idea, I'm using this as a hedge. I bought at 1527, I bought it at 1607. I'm using dollar cost average, similar to Black Zero approach, to hedge my portfolio. Russell, so that's SH and Spider position, IWM, right? IWM. Someone asks, so I'm still long IWM, 180 call and 190 call. I think I went over this, right? So Raymond, you're right, one. So overall, I'm more bullish. I mean, neutral, slightly positive, because I do have a put spread. I have 160, 150 put spread, but I do have 180 call, and I closed the 190 call. So I'm bullish. You're right. I do have slightly bullish bias. All right, Paul still stock. They're all, Lagarde is smiling. Everybody's having a good time. Excellent. And market is fluctuating between gains and losses. QQQ slightly higher. Spiders looks like from off of its session lows. And so we talked about, I do have XLK options spread. Right, so this is another way to, but chart patterns you can see very similar, right? XLK, QQQ, spiders, it's same trading, just I'm showing you different examples based on whether you like to trade options or stocks and how often you like to trade. And I did add on to the XOP position, right? Add into XOP, strong elevator down, almost elevator up. I still think there's more room to the upside. All right, any questions? Gilite. Absurdly indignant. I love Discord, the names are awesome. Black Zero, FTLT. All right, Discord guys, thank you for participation. FTLT, Black Zero, Bill from South Carolina. We have more and more people every time. Love it. Thank you for participating. Let me know if you have any questions. I'm going to put down that. You guys are welcome to sign up for a free trial of our software. All right. Go to webinar. Any questions? So banks are weak again. Yield curve inversion, right? Flattening of the yield curve. 3.1 on 2-year yield, 3.11 on 2-year yield, 3.14 on 10-year yield. So you have a yield inversion that negatively affects JP Morgan, right? Short term. A little bit positive for the QQQ, right? Lower yield continues to drop, right? Main beneficiary is the technology, and that's one of the reasons why I think Google will outperform JP Morgan. That doesn't mean JP Morgan is not, it's not like Google is going to go up and JP Morgan is going to be down, right? But maybe for short term, right? Going back to our Google and JP Morgan comparison, right? Like Google might go up 70 basis points, and JP Morgan might be up only 3 basis points, but they're both going to move in the same direction, right? You can only have this divergence 1 or 2 days where, Google is up and JP Morgan is down. But for the most part, they're going to move in tandem, right? I think Google will outperform JP Morgan, but a lot of it will depend on this yield inversion. Let's see, actually. So Google is up. Mega cap is what driving the technology up 60 basis points. That's good. Apple up 1.5%. Strong rebound on Apple. That's good. Mega cap technology is what driving the market now. Microsoft is up almost 2%. That's constructive. Tesla is down. That's not good. And Amazon. Those are the new FANG stocks, and Amazon is up 3%. So that's constructive, right? More important than are these mega cap, not mega cap, trillion-dollar companies or mega cap technology stocks. So you can definitely see strong price action in. Let's go back to my positions. Poor Carnival Cruise. This is just getting beat up. So you can see retail sector. So the theme has changed, right? It's all about consumer. And if you're in business, if you're in B2C business, right, and you're targeting consumers, you get destroyed. Carnival Cruise, Delta Airline, Tesla, Amazon, they're getting beat up indiscriminately. Mega cap technologies outperforming, right? Apple up 2%, Microsoft up 2%, Amazon 3%. Google 0.5%. All right, it's 9:12. Still watching the market. It's kind of going back and forth. Yield is consistent, so that's positive. Dollar slightly negative. All right. Any other questions? FTLT, any questions? All right, so then before we adjourn, let's just recap for the new participants. Number one rule is, it's position size, right? You want to kind of avoid these situations where you have a fight or, right, where we're talking about fight or flight response, right? Fight or flight response, especially if you're not, if you don't have stop levels, the only way to do it is kind of, not to trigger this response is, which we're all trying to avoid, but it's a natural response. And the only way not to have that response is position size. So you look at, you could be bearish on the market, you could be bullish on the market, you can make money on both sides. But one thing you have to figure out is how to decide on position size, right? And you can look at these retracement. We went over some of the examples, but this is the most important rule: number of positions and position size. If you can get that right, sometimes you'll be on the right side of the market, sometimes you will not, but overall you will be successful. If you can get the position size, the only way to get it successful is to figure out what that is. And that's a little bit different for everybody, right? It depends where you are in the journey as a trader, right? The journey for some of us started a few weeks ago, for some of us started a few decades ago, but we're still learning, we're still in the journey. We all have different risk tolerance levels, right? The trigger of fight and flight is different when I was 20 years old and I managed, $500 versus when I'm 47 years old and I'm managing, $40,000, right? So, but the point is the same, whether you're 20-year-old or 47 or 67 or, the point is the same. You have to find that trigger. For position, wait for 2 to 3 days to confirm the trend change, right? Based on the model, we are in uptrend, short term. Long term, we're in downtrend. Short term, for the next 10 days, we're in uptrend. So if you want to see if the trend has changed, right, that's kind of $1 million question. And you look in days, you want to, we have day one, right? Day one doesn't change the trend, right? So you have a day one pullback. If we do have a follow through day 2, day 3, right, then trend is changing. Unfortunately, sometimes it's, by the time you wait 2-3 days, market is already down 15%. And that's the nature of the bear market. More often than not, it's, maybe a little bit less of a less drastic move. But in bear market, usually, 2-3 days and market is already down 10%. So for that reason, the only way to protect yourself is trade size, right? It's a trade size. But I would, 1 day doesn't change the trend, right? So we'll see if today and tomorrow we have a follow through. All right, it's 9:16. Thank you very much on Discord user. Okay, when is the next section? If you have an impromptu session, how would I know? So next session is, I'm actually traveling tomorrow, so we're not going to have a strategy roundtable. We will have a live trading room tomorrow morning, not on Discord, just on GoToWebinar. On Discord, next session is going to be Monday. Monday is the 4th of July, so then Wednesday. Let me look it up, what that date is. Thank you for asking. So next session would be on the 6th, July 6th. Let's post it to everyone. Hi, next live trading room session is on July 6th, Wednesday, at Market Hope. Join our community of traders. Bill, Scott will do Friday morning, right? So Scott is doing today the close. So Scott will do the closing bell today, and he will do Friday morning, correct? TLT is moving, right? I think the theme is changing, right? The theme is changing. TLT is back into this channel. It did pull back, it rallies. Again, it's inversely correlated to the yield. I think the narrative is changing, right? From the hyperinflation, where yield is just vertical line up, right? Elevator up. I think it's going to be elevator down, right? Because the theme is changing. Nobody's concerned about hyperinflation. Now everybody's concerned that the only way to deal with hyperinflation is demand destruction, right? The demand, the consumer retail demand, consumer demand is going to continue to deteriorate as we approach the end of the year. The only place to hide is dollar and treasury, right? You buy treasury, you buy dollar, and I think that theme is going to continue. Teresa, thank you for your kind feedback. Albert, thank you. Bobby, not 67 or 47? I don't want to know anybody's demographic information, right? I just know Bob, and that's it. So, Desi, thank you. Thank you. All right, guys. Everybody, thank you very much. Have a great day. Join our Discord community. Join our YouTube community, and I will see you tomorrow morning. So tomorrow morning, not on Discord, but the regular GoToWebinar sessions will be on the. It will be live on GoToWebinar. Thank you very much, and have a great day. Discord guys, I will see you on July 6th for the next live session.